Welcome to episode 3 of the X Show. Shout out to the viewers and subscribers staying tuned in with Mr. XS market updates. Today we will be talking about cryptocurrency exchange Kraken and the S.E.C complaint and more. On February 9th, 2023, Security Exchange Commission charged crypto exchange for the offer and sale of unregistered securities through Kraken staking as a service program. The S.E.C chair Gary Gensler stated in a recent tweet, whether it's through staking as a service, lending, or other means, crypto intermediaries must provide the proper disclosures and safeguards required by security laws by the S.E.C. According to the press release found on the S.E.C. Gov website, Payward Ventures, Inc., and Payward Trading Limited, both commonly known as Kraken, with failing to register the offer and sale of their crypto asset staking as a service program, whereby investors transfer crypto assets to Kraken for staking in exchange for advertised annual investment returns of as much as 21%. To settle the S.E.C charges, the two Kraken entities agreed to immediately cease offering or selling securities through crypto asset staking services or staking programs and pay $30 million in disgorgement for judgment interest and civil penalties. According to the S.E.C complaint, since 2019, Kraken has offered and sold its crypto asset under staking services to the general public, whereby Kraken pools certain crypto assets transferred by investors and stakes them on behalf of those investors. Staking is a process in which investors lock up, or known as stake, their crypto tokens with a blockchain validator with the goal of being rewarded with new tokens when their staked crypto tokens become part of the process for validating data for the blockchain. Investors provide tokens to staking as a service provider. They lose control of those tokens and take on risks associated with those platforms. According to complaints document, page 10 under facts, Kraken advertises that the program offers investors worldwide, including most U.S. investors, an investment opportunity to participate in proof-of-stake consensus and receive benefits that may not be available to those investors if they staked on their own. For example, Kraken's program offers to investors no staking minimums, no upfront fees or deposits, purported industry-leading cybersecurity protections, a simplified and easy-to-use, one-stop-shop trading platform, and the ability, through Kraken's efforts, to obtain returns based on Kraken's participation in proof-of-stake activities for different types of tokens. Validators who participate in confirming transactions on blockchains may collect fees to participate in the validation of transactions. The consensus mechanism typically is a set of rules followed by the validator nodes or computers on a blockchain's network running the blockchain protocol that are able to validate transactions. Proof of stake used by blockchains such as the Cardano, Ethereum, Polkadot, and Cosmos involves the protocol selecting from crypto asset holders who have committed or staked a minimum number of tokens to validate transactions. This means users can stake their own crypto assets, or they can delegate their crypto assets to a particular node for that node to use them in staking. Nodes often act as staking pools when others designate their crypto assets to that node for staking of their tokens. The greater the amount of crypto assets staked by an individual or group relative to all the staked tokens, the more likely that holder is to be selected as a validator and earn the ability to receive the staking rewards. Thus, the most successful staking operations are those that maximize the chances of being selected by the protocol and thus being rewarded with more crypto assets, typically by staking a large number of tokens. This explains how crypto exchanges make money off such activities. All viewers are encouraged to read the full press release and material provided by the S.E.C website. Link will be in the description below. Also, something to note: CEO of Coinbase Brian Armstrong tweeted a rumor regarding the exact press release of Kraken's and S.E.C case. You can see more of this in episode 2 of the X Show. The ongoing case between Ripple and the S.E.C. CEO of Ripple stated in a recent tweet, stating the recent positive developments heading towards clarity and global regulation is exciting of sorts. One can imagine the speculation of this court ending, and based on recent results in the Kraken case, all seems to be doom-gloom for XRP. However, as to what Brad Garlinghouse advocates, clarity is key, and so far Kraken has not provided enough clarity or disclosure to retail investors around the risks of staking as a service, according to the S.E.C. However, if you compare recent events, Switzerland's second biggest bank has reported a net loss total of 7.29 billion francs, marking its its second straight year in red and is still expected to report losses for the quarter of 2023. Switzerland's second biggest bank has begun a major overhaul of its business, cutting costs and jobs to revive its fortunes, including creating a separate business for its investment bank under the CS First Boston brand. The bank raised 4 billion Swiss francs from investors in December, according to a recent news report by Reuters. Mass rounds of layoffs continue, as media giant CNN reported. Yahoo plans to lay off 20% of workers for 2023. One has to wonder, how long can the president of the U.S. hide behind a so-called strong labor market, and will the Federal Reserve truly implement a less aggressive monetary policy? The timing of this is extraordinary. However, I encourage you to do your own research. Link in the description to what has been mentioned. In other news concerning financial markets, gold is trading at $18.68 to the dollar, which has declined from resistance zone ranging $19.59 to $19.00, and has formed a bearish pattern indicating lower prices to as far as $18.00. Meanwhile, the dollar index seems to be showing strength for the short term, targeting 105 resistance zone and currently at 103. Bitcoin has broken and closed below support zone, as there seems to be more issues in light of the S.E.C going after crypto exchanges such as Kraken, resulting in the recent decline in price, and is now trading at 21,800. Next support zone lies at 20,000. More seems to be unfolding in the crypto market. Will this be the last catalyst to push the crypto market lower? Mr. X will continue to find out more as the story unfolds. Thank you to all viewers and subscribers of The X Show for your continued support. Please continue to support The X Show by sharing this video with all your peers. Stay tuned in for next episode of The X Show.